Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about debit control, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy, guys.
So let's put on a big ass fly and see what its price is right now. Its price is 31.75. That's like the price you would get in the morning on markets that have super low VIXs in the 12 to 14 range. But this morning it was 23, right? 23. I think I got down there. So that's what it started off as this morning. And it's had a fairly good rate of decay. Nearly half or just about half of all of the available premium has decayed today already at 11:58 in the morning, which usually doesn't happen until 12:30, 1 o'clock. So that's interesting.
This four-man straddle that we're doing, we're going in as a debit and then we're exiting for total net credit. Very similar to the condors or butterflies, but the other way around with the strategy where it's you go in as a credit and then you get out as a debit.
It's that way with every trade, every options trade. A lot of people put on a at the money wide butterfly, but they put on an iron butterfly because they like the idea of collecting a credit because somehow they've convinced themselves that that's different than putting it on for a debit, but it's not different.
Oh, okay. So what we're doing is the same thing, but it's just the other way around.
Yeah.
Collecting decay.
Yeah, the amount of decay and the amount that you're collecting in terms of premium is exactly the same, whether you're putting on an iron butterfly or a long fly. It's exactly the same, right? But what I'm saying is that others that practice a similar strategy will only use the iron butterfly thinking that they must do that and then collect a premium prior to, and as if that somehow is giving them a leg up. And it's not. There's no difference. There's no effective difference between the two trades.
But
It
our
all comes
edge is
down to what
25.
happens when you close the trade.
Our edge is 25 and below. If we're getting low 20s, then that's our edge.
I don't know what is the best, right? Other than through my own empirical evidence and the number of trades that I've put on. And I've noticed that when it's 25 or lower, I have a way higher win rate.
And it's more than 1-to-1.
It's almost exactly 1-to-1. It is exactly 1-to-1.
No, when it's lower than 25, then you have higher than 1-to-1.
That is correct. But what I'm trying to say is that when you're at 25 or lower, the gamma risk is lower, the rate of decay is faster. It's right at that cutoff that gives you, like you said, more of an edge. There's a definite difference between that and anything above. And from my point of view, I've noticed just a higher win rate when choosing those trades. And so that's why I choose that as a cutoff. Is it perfect? Is it the same relative risk every day? No, it can't be. It's always a little bit different. I'm just saying that is my own personal, anecdotal, empirical evidence that I've had much better luck when I choose that trade when the debit's 25 or less. So you got to come with some sort of cutoff. You have to choose something. Or if you're more sophisticated, maybe you can alter it a little bit. You might say, today, because of such and such, 25.50 is okay. And then other days, 24.75 is my limit today. I don't know. I just know that 25 has definitely given me better results than 26, 27, 28, 30. And for all the reasons that I've said, but I suppose I could do some sort of calculus and figure this out and then look at all the conditions that have ever occurred over the history of this trade and then come up with some beautiful average number. Is it really going to help me on that day? No, and it's probably going to come very close to my 25. It's the same thing about the 1-to-9 risk to reward, the 10% debit rule. Is 10% debit the perfect ratio for debit versus potential profit? I don't know how anybody could make that claim that it's the perfect number. But I do know that I observed floor traders trading that because that's what they found through empirical evidence of trading this for a long time. That's what worked out best. And when I've put on thousands of trades, I've noticed that somewhere between 9 and 11 seems to be a sweet spot. So maybe even a little bit below 9, maybe 8.5 to 10.5. Somewhere within there seems to be a sweet spot on most occasions.
And then I know that for a period of time, when I joined back in the days, I think you had made the comment of going 40 wide was the best one over a period of time. But then since then, you evolved to going off the VIX with the range.
With limited experience where the VIX has been historically. So when I first did this study a long time ago, I found that wider was almost always better. But at the time that I did the study, the VIX was higher than it was today on average. It was like 24 to 28. It was like staying up there in that range. And yes, wider was definitely better there.
Gotcha. Okay.
That's how I came up with the range, because then I experienced all the different ranges and then did hundreds of trades over all those different ranges. And then
I
you
like
start
that,
coming
yeah.
a more nuanced answer that is more conditional upon the context.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.